Welcome to the Explainer. So today, we're not just going to walk through a process. We are going to deconstruct the logic behind the IRS's new mandatory system for the energy-efficient home improvement credit. Our goal here is to really dig in and find those non-obvious requirements. You know, the hidden traps and the critical cause and effect relationships that you absolutely need to master. So we have broken this whole thing down into 5 modules, and they really build on each other. We'll kick things off with the why, the mandate itself, and then we'll get into the nuts and bolts of access, the application, and compliance. And then we'll wrap up by taking a look at where this whole system is going next. All right, first up, the mandate. And look, it's really important to get this straight. This is not just another piece of paperwork. For tax year 2025, this becomes the absolute ground rule for playing the game. And its logic? Well, it pretty much dictates every single thing you're going to do within this system. So here's the bottom line, the really crucial point. If you don't have a qualified manufacturer ID, or QM ID, homeowners can't claim the federal tax credit when they buy your stuff. I mean, this creates a super direct, totally unforgiving link that's going to hit your market competitiveness. No QM ID, no tax break for your customers. It really is that simple. Okay, let's get into Module 1, Portal Access. Now, before you can even think about filling out an application, you got to get through the front door. And you should really think of this as the system's main security checkpoint. Honestly, the way it's designed tells you a whole lot about how the entire process is put together. And boom, right out of the gate, we see a really key design choice here. The process, and this is deliberate, it starts outside the IRS. You first have to get verified by a totally separate company, ID.me, before you're even allowed into the IRS's own portal, the Eco Portal. So what this tells us is that the IRS is basically outsourcing that critical first step of verifying who you are before you can even get into their world. All right, on to Module 2. This is really the heart of the whole system, the application engine itself. And please don't make the mistake of thinking this is just some simple web form you fill out. It's not. It's a dynamic system, and it has these built-in feedback loops and several different specific outcomes that you really need to be ready for. So, as you're plugging in your data, here's something really interesting. A requirement that's kind of hidden in plain sight. If you're a company that makes windows, skylights, doors, or heat pumps, you also have to define the specific geographic regions where they're eligible. Now that is a critical filter, and it's super easy to miss. You're also going to need to have your proof of manufacturing all ready to go, and keep in mind those really strict file constraints. It's got to be a PDF, PNG, or JPG, and nothing over 10 megabytes per file. Okay, so you've done all the work, you've entered the data, and you click Submit. What happens then? This right here is the critical handoff. Your application is now out of your hands, and it's officially in the IRS verification system. And at this exact point, the system's logic splits off into one of 3 totally separate paths. And this table just lays out the system's internal logic perfectly. You've got 3 outcomes: approved, more info needed, and rejected. But do you see the pattern here? For anything that isn't a straight up approval, the system forces all your communication through one single channel, secure messaging. And I want to be clear, this isn't a suggestion, it's the mandatory designated route. Now, this quote from the IRS, you gotta see it as more than just some friendly guidance. It's a crucial piece of strategy. If you get rejected, listen, the absolute worst move you can make is to just immediately reapply. The whole system is designed to make you use secure messaging first to figure out what went wrong. Taking that step, being proactive, is literally the only way to avoid getting rejected a second time for the same reason. Okay, so let's say things go well and you're provisionally approved. The system will then ask you to generate your unique 4-digit QM ID. It'll give you a code, and you can either take it or ask for a new set of options. But you have to be really, really careful here, because that regenerate button, it has a huge irreversible catch. And yet, there it is. This system will let you click regenerate exactly once. You'll get a new list of 5 codes to choose from, but that's it. Your choice is now final. You have to pick one from that second list. It's a one and done deal. There's no going back.
All right, moving on to Module 3, Ongoing Compliance. And this is so important. Getting your QM ID is not the finish line, not even close. It's really the starting gun. To keep your status, you have to understand the system's rules for procedure, especially the very precise order of steps you need to take for something as simple as discontinuing a product.
And the key thing to get here is the super rigid order of operations. You can't just log in and uncheck a box for a product you stopped making. No. First, you have to report that product line one last time on what's called your Qualified Manufacturer Periodic Report, or QMPR. Only after you filed that report can you then log in and actually remove the product type. If you get that sequence wrong, you're just asking for compliance headaches down the road. And are you noticing the design philosophy here? That pattern just keeps repeating itself. The system's architecture, once again, funnels you back to that single, non-negotiable communication channel. Any and all questions about compliance must go through the secure messaging app. Trying to pick up the phone and call someone? That is just not an option the system is built to handle. Okay, here we are at our last module, the road to 2026. And it is absolutely critical to understand that this system we've just spent all this time breaking down, well, it's not the final version. This whole QMID process is just the foundational layer for a much more detailed tracking system that's already on the horizon. Yeah, this timeline really shows the planned evolution in black and white. For 2025, you have this 4-digit QM ID, which basically just identifies the manufacturer. But then, starting in 2026, the whole system shifts to a 17-character product ID number, or PIN. We're talking about a massive jump in complexity here, from just tracking the company to tracking a specific product. So this move from a simple company ID to a really complex product-specific PIN, it obviously means a much heavier lift when it comes to data management and reporting. And that leaves us with one final and really critical question that you should take back to your teams. Are your internal data systems actually ready for the demands of product-level tax reporting? Something to think about.